Hello and welcome to this edition of the CIMA Management Accounting Series. I'm David Williams. On today's show we'll be discussing financial strategy. The global management accounting principles define financial strategy as the identification of the possible strategies capable of maximizing an entity's net present value, the allocation of scarce capital resources among the competing opportunities, and the implementation and monitoring of the chosen strategy so as to achieve the stated objectives. Now, in studio with me to shed some light on this topic, I have Pienaar, who is Chief Financial Officer at Grande, Jaco Moolman, who's Senior Lecturer at UNISA, and Alexander Visser, who is Head of Finance for Phillips Africa. And we're also, of course, joined by our studio audience. Well, I like the mix that we've got here, gentlemen. We may also have a lady from Nigeria joining us in a moment, but for the moment it's gentlemen. And I like the mix because we've got two people out there, hands dirty on the ground, chief financial officers, and we've got the academic from UNISA. So, Jaco, I'm going to ask you to kick it off, please. In a way, what I just said as the introduction there is summarized by three decisions. Investment, what project should be undertaken? What must we do in this organization? What do we have to spend money on? How do we raise the money to do that? And then how much of the cash that we raise should be kept for the business, and how much should be given to the shareholders in dividends or profits or distribution or whatever. So perhaps you start for us with the relationship between these three areas.
Absolutely. As you've mentioned, these are three separate decision-making areas, and there will be separate analysis to make each of those decisions, but they're all interrelated because the investments that are made will determine the nature, extent and timing of the financial resources that will be required and the cost of capital. And in turn, that will establish how much retained earnings needs to be kept for reinvestment and how much cash in the end will then be available for distribution for the dividends. So although each will require three separate decisions, they are interrelated and directly affect each other. Okay,
I mean, it seems obvious, but perhaps it's not so obvious to everyone in an organization that this is how it should work.
It is, and I think even though they are interrelated, it is important to remember that there is still a chronological order to these decisions. The company firstly has to establish what investments they expect in the future, and as I mentioned, the nature, extent and timing of those, and then only will they be able to establish the financial resources that they will need to acquire, and from there a dividend policy can be structured for the future.
Okay, well, the other gentlemen, let's get their response to the theory, if you like, first, before we go into the practice, Dylan.
Yeah, thanks, David. I think before I dive into each one of the underlying issues, there's an overlay on top of that, which really relates to the company's strategy and understanding what that strategy is. Without understanding what your stakeholders and your users want, it's very difficult to understand, well, what investment decisions do I need to make? How much am I going to give back to them? And even going to funders and going to your shareholders to ask for money to fund investment opportunities. So strategy for me, throughout all the principles of management accounting, is the start of it all and the most critical. And I say that because a lot of companies don't actually know what their strategy is, and it takes a long time to develop strategy. So for me, that's the important starting point, and then you kick into your kind of chronological decision making down the line.
Of course, your strategy is really a choice, isn't it? I mean, a company is sitting there and it's saying, well, what are we going to do? We can't do everything, so what are we going to choose to do? And that, in fact, is the strategy. Yeah. Alexander.
No, I fully agree. I think it is exactly also how our company works. So we have an overall strategy to invest in Africa, but in that overall strategy, you start making choices around portfolios, around markets that you want to enter or not enter, and basically allocate capital accordingly, as it is not infinite. There's only such an amount of money that you want to or can work with, so you need to make the right choices.
Well, I'm going to work through each of these with you in a moment, but I want to come back to Jaco quickly, and I experienced this in working with the Defence Force in South Africa. They did the Defence Review, and it's a massive document, and of course Defence is all about strategy, but there's also a budget. So the key question that has to be asked by the Defence Force is, do we set up a strategy and what we're going to do with our Army and Navy and Air Force, and then find the money, or do we start with the money and say, well, what can we do with this if that's all the money we've got? And in fact, that's their problem, is there's only so much budget money, which means that whatever their strategy is, they're going to have to tailor it to the budget. So there's a chicken and egg here, and the chicken seems to be the budget, not the strategy very often.
Yeah, absolutely. I think it is slightly different for non-profit organizations or government, for example, because for them it's all about value added and how much value they can add in the process. Their customers, essentially the public, want value for money. And it still starts off with their strategy. And then obviously the budget will have to be aligned to that. Simply throwing a lot of funds in the direction of something without a strategy and understanding where it will be invested or how the funds will be used certainly won't work. So at the end of the day, it starts off with financial strategy and how the funds has to be invested, and then you start sourcing the necessary capital.
I suppose that's also where people talk about vision. I mean, it's a much overused word. You say that's where we want to get to. Now, have we got the resources, and what are we going to do, mission, in order to get there? But Dylan, let's kick off with the investment. What project should be undertaken by the organisation? Sounds simple and obvious, but on the ground, your experience, how does it work?
Well, without a doubt. I mean, once again, linking up to your strategy, you understand what type of investments are you going to look at. And the availability of good investments isn't necessarily there all the time, so you need to filter through all the investments to understand what is a good and what is a bad investment for your company.
Let's take examples from Grand Parade.
Well, Grand Parade's quite unique, and I mean, I'll skip down a level. And a lot of our strategy is driven by the dividends we give back to our shareholders. We are a community-based investment company. Our legacy is based with the community in the Western Cape, and it's always been about giving back to the shareholders. So when we enter into an investment, one of our first questions is, can we still support our dividend policy? Are we going to be able to pay an annual dividend to our community shareholders? And sometimes investments fall out of bed because of that, because they don't generate enough cash.
Whereas other companies might say, we'll decide on dividends when we come to it, but you're saying it's not that sort of company.
It's a unique company in that aspect. And then without a doubt, what kind of value can that investment add to the business? Now, what resources are we going to allocate to it in terms of financial, people, processes, and what do we expect to get out of that investment? And it's got to add value to the business.
So let's take Burger King. I mean, that's
good example.
You're famous for doing that. We thank you very much. They sent burgers for us in the morning on the morning show when we talked about it. But that was an interesting one, a global brand which you bought into, and then it arrives in South Africa. Now, it seems simple to us. Yeah, they bought into, now we've got burgers and there's a queue outside the one in Sandton. But what went into that decision?
Well, that decision, to be completely honest, was opportunistic at the beginning. We were a gambling investment company, and through our chairman, who's quite connected and influential, this opportunity presented itself. So you can imagine there was a lot of debate about that. We're changing industries, we're moving into a kind of a diversified investment holding company. But we really believed there was an opportunity to grow this asset and start at the ground level and grow with it. We did have a lot of help from the BK Global guys who had kind of torn the QSR market in South Africa apart, and there was a gap, and we knew that we could take that gap. And that strategy evolves on a daily basis. Initially we were only going to open up a few stores, and it's growing every single day. So literally daily we're making decisions. Do we take our capital and put it into Burger King to open up another store, or do we go and look to invest in another business? And it centers around dividend and growth and adding value to our stakeholders. I'm
going to come back to how management accounting helps you in that process, but let's get the perspective from Phillips. Now, Phillips is a global company, famous company from the Netherlands, a long history and heritage. And in Africa, I'm not sure of the reach that you have in Africa, but I'm sure it's substantial.
Yeah, so we did our first business transaction in Africa in 1896. So that goes basically a couple of years after the founding of Africa. We were here. We built the company up until 35 countries somewhere in the 80s, which was a deliberate investment decision. But we also deliberately scaled it down again when money was scarce in the early 90s. And the money was basically diverted to China. And after building China, we started building the Middle Eastern districts. And now we are back at the moment in time where we are reinvesting a lot of monies in Africa. And that is not so much about dividend policy at the moment. It's really about establishing a footprint from which we can start creating value for our customers, but also obviously for our shareholders.
Well, let's look at it from the point of point number 2, finance. How should the necessary funds be raised? How does Phillips do that? And implicitly what you've said is what Dylan was talking about. You've decided on the strategy, you change it, as circumstances dictate. Now you're expanding and investing again. So where do you get the money?
Yeah, so Phillips Africa is basically a subsidiary of what we call Royal Philips, based in the Netherlands. And what we did in 2011 is create the master strategy for Africa, which included a plan for all 54 countries to either enter, not enter, which included timing, and where we decided on tier 1, tier 2 and tier 3 countries. Obviously that phasing required capital. So by now we are executing the strategy, and every year we get an equity injection, including obviously also debt to keep the structure alive, to make that strategy happen. And if we are slower than expected on the strategy, we get less money or maybe more to catch up, and vice versa.
So that brings in the monitoring aspect that we talked at the beginning. How does this sound to you, Jaco? Out there on the ground, how does it tie in with what you're knowing and what you lecture on at the university?
Yeah, absolutely. I think all of this we have to remember that the ultimate goal of the company is the maximization of shareholder wealth. And that can only be achieved through an increase in the market value of the shares or then in dividends. So they've indicated that they pay a regular dividend. And Graham Joffe has famously said that profit is merely an accounting term and that returns is the real measure of performance. So I think that will be the greatest aim for the company, is to ensure that they provide great returns to their shareholders. But the challenge for directors is to strike a balance between paying the dividends and keeping enough retained earnings so that they can invest in new projects, whether that be in Africa or anywhere else in the world.
I want to hear from the two guys out there on the ground, as we say, the Grand Parade and Phillips, the management accounting function in your organisation, how good it is. I think there's some organisations that do some management accounting but don't realise that they are. It's not deliberate, it's not coherent. Give me an assessment of how yours stands.
It's an interesting space right now. I mean, we were chatting just before we went on air and said that you look through the management principles and that's really your daily life as a CFO. You look at everything, you just don't put a name to it. But I say it's an interesting space because historically your finance function in an organization was very technically focused. It was a matter of getting out your statutory accounts, reporting monthly results, historic backward-looking information. That side of accounting has become so technical, and you almost need a division just looking at the technical aspects of accounting, and so that your historic reporting is correct. And the way I see it is we need to start migrating and creating a management reporting, management information department that starts looking forward.
In other words, a management accounting function.
Without a doubt, there's a definite need for that. And I think the biggest mistake you can make in your finance department is becoming a technical finance department. You have to build in that management accounting, pulling from all spheres of the business, so operations, even HR. I mean, people are probably your biggest resource, and combining it with finance to give information to allow the decision makers to make the right decisions.
How does yours
function? I fully concur. Again, what we did is we basically created 5 divisions in finance, where we what we call financial planning and analysis is really focused on creating the insights. So we created centers of expertise, where we try to combine basically scale. So what the COE, or Center of Expertise for Commercial, is located in the Netherlands, and basically creates insights for the market Africa that the management accountants, and including me, use for decision making. More the statutory part, or looking back, there's also a Center of Expertise really focused with all kind of experts and accountants on making sure that our statutory is world class.
Jaco, I want to ask you from what you know of the field, and you have a sort of bird's eye view as an academic, to what extent do the structures of companies reflect the importance of management accounting? And I must confess, when we started this series, it all made sense to me, the management accounting guidelines, the discussion documents, but when you talk to companies, you never hear them talking about management accounting. They'll talk about the annual results, and there's a CA who's the financial director. But it strikes me that maybe the structure doesn't reflect the importance. In other words, a department, as you raised, with someone called the management accounting principal or whatever. What's your sense of, do the structures reflect what is necessary?
Yes, I think the role of management accountants has become more and more important, and CIMA is perfectly positioned for that, as they do everything that the CFOs apparently require. You know, it's backward-looking, forward-looking, and it's ideal to help with analysis and decision making. I think the improvements and rise of integrated reporting has also required separate divisions to focus on financial strategy, and that has also improved the disclosure requirements and has necessitated a greater emphasis and perhaps putting a name to things, whereas in the past it was more just out of the box thinking and putting a number of ideas on the board, whereas now it's more focused with more integrated planning and especially forward looking.
Yeah, building on that, with the CIMA qualification, and I've got a similar education in the Netherlands, which is not called CIMA, but RC, which basically it entails the same.
In the Netherlands?
In the Netherlands, yeah. The education is so integrated with other functions. So my knowledge, at least I can challenge HR, supply chain, production, that I am ideally positioned to bring it all together with a technical staff of management accountants to really create valuable information for the company to make the best decisions.
Dylan, do you find any problem in getting what you need in terms of these structures and people from the company? Do they let you do it? I mean,
without a doubt. I mean, I think it's almost incumbent on a financial head to make sure that information is given to the decision makers. Traditionally and currently, information flow from a financial point of view comes from a finance department. So I think it would be foolhardy of a business to kind of limit the scope of a finance head in that aspect. I think what is difficult is getting the structures from an investment holding company point of view into underlying investments in companies. So we can invest in a number of different companies, and we've got to try and exert some kind of influence to get their structures right, so that this kind of myriad of information filters up to really user relevant information to understand how the business is doing.
Also, what strikes one is in this era of IT, the access to information is voluminous and instant. Whereas before you had to write letters, you had to send files, people had to look at them. Now there's all this information. So in theory it should make management accounting much easier, but in practice, Jaco, there's so much information, you've got to find methods of sifting it, of finding what you need.
100% right, and I think in that lies the trick. And in the same way in what you need to communicate to all your stakeholders, that also becomes really important. A prime example of that perhaps is the construction industry, which is notorious for paying very good dividends, whereas recently listed Attack didn't pay any dividends in its first year, but it clearly communicated the path for the future and what earnings will be generated, and that was more than sufficient for their market share and their share price to significantly grow in the first year. So I think the emphasis there again is on communication, and as long as it's well communicated out there, stakeholders and shareholders will accept that.
Well, I'm glad we got to that, because we want to talk about communication in the business. And again, in the real world out there in a business, you might have a department doing the right things, but the rest of the business doesn't know what they're doing, doesn't know how important it is, doesn't get guided. What have you found are the difficulties here? Because nothing works perfectly.
Yeah, so in terms of communication, I think that there are two pillars. You've got internal communication and then communication to your external stakeholders. Internal communication is probably the most important to start off with. You mentioned a whole lot of information and having access to all this information. It's important that the strategy and the end users' requirements are understood by the business from the top down. So you don't have people running around just gathering information because there's a lot of it. They actually understand, well, my end decision maker is going to require this information. Let me filter it out and feed it up the organization. So I think that the communication of strategy, where the business is going, is critical internally.
How do you do that? Do you have monthly meetings? Do you have special emails? What do you do?
It boils down to people, and like I said earlier, when we're talking about resources and allocation of resources, it's not just financial. It's people and processes. So it's investing in the right people that can take that information at a high level and feed it down to the organization through all the levels. And that is a challenge in itself. It's relatively easy to get financial resources, but to get the right team and the people that understand your business and feeding that down throughout your organization is a challenge. And communicating externally with your shareholders, I mean, that's the crux of what today's topic is. Allocation of resources. Being a listed company, we've got a lot of institutional investors as well as our community investors. And their number one question is, how is management allocating their capital? And if you don't get it right, they want to see a new management team in. So if there's one objective as an executive of a company, is to make sure you've allocated your resources correctly, and when you allocate them, communicate it to your stakeholders.
In fact, it's even more important than the last year's financial results, because as soon as you know last year's financial results, right, but it doesn't tell us what the business is going to do, and that's what we're really interested in. That's where we have to make decisions on value as investors in the future. The past only tells us a little bit about the future rather than the past. A bigger organization like Phillips, I worked for a big organization, South African Breweries, and you were very aware, however hard they tried to be entrepreneurial within the units, there's still a pyramid structure. Very hard to get away from it. And what the guys in the Netherlands are saying, or in Johannesburg if you're headquartering Africa, not so easy to get down to Ghana or Kenya.
No.
So how do you do that?
Yeah, that's actually one of the biggest learnings that we took in the last couple of years, that indeed there's this big Africa strategy created in 2011, but we didn't see it come alive quick enough. So what our two biggest root causes that we found is empowerment, so really holding the people on the ground empowered to deliver the results, and the other thing is exactly what we're now discussing, communication. So we have been building over the last 2 to 3 years really what we call last mile plans, where we start building this global strategy or Africa strategy into really local initiatives and making sure that every initiative has an owner, a timeline, and really start driving it. And that is not only finance, that is basically amongst all the aspects of business, and then holding the people accountable. Making a decision in Johannesburg on behalf of Ghana doesn't make any sense. I don't know Ghana. People in Ghana know Ghana. So that is where we really started having a mind shift, and we now see the successes coming in.
How would you score your organizations out of 10 in terms of how well you've communicated management accounting? How much space still to go?
You're going to have to edit this one out. I mean, out of 10, I would put us just above the mean, 6 or 7. You can always work on communication. GPI in particular.
I'll tell you why I asked the question, and I'll ask it of you as well, is that the documents here are very valuable, but they are abstract and theoretical, which is why we're taking the discussion into the real world. So the danger in your organization, they say, that's just the accounting stuff, they read it and they say, it's not really relevant to what I do every day. So that's why I'm asking that question.
Yeah, no, it is relevant, and as I said, it's one of the bigger challenges. And it's really, as Alex said, empowering the people in the organization from the bottom up. And if you can get your entry-level employee to buy into where the company is going, what they're trying to achieve, and then follow that all the way up, you've won the battle. I don't know if there's an organization out there that's achieved that, but you can continuously work towards it.
I must tell you a story at Momentum, the financial services company. Larry Pienaar, who was the chairman, they had one of their many acquisitions where they amalgamated with other companies. And the new company came in and they weren't sure of what the rules were. So one of the things they wanted to know was, when we travel to London, can we travel business class? And if we get there, can we use a taxi, or must we use the bus or the tube? How does it work? What's the policy? And instead of setting up a whole division to investigate this, Larry Pienaar said, if this was your company, what would you do? And let that guide you.
I mean, I think that's a great philosophy. I mean, if you're going to start trying to manage people with policies and procedures, you're going to lose them. I mean, they're human beings. Everyone's got emotions and feelings. And it's a matter of saying, this is your company too. Make the decision that you believe is right. And you're not always going to have people making the right decisions, but you can distinguish between the people.
But easier to empower them if they know why the projects that have been undertaken have been undertaken, to look at our list. Where the money is coming from and where it has to be paid back or distributed. All that is empowering. It's management accounting stuff, but it's empowering. In your organization, the level of communication? You've got to give a score. He gave 6.
Yeah. I actually gave 7.
7. That's called inflation.
Yep.
Now, I would first like to react on the travel item. So I think key is that you hold people accountable for delivering results and not try to indeed micromanage them, either with travel or with what our company likes to do is, for example, to decide on pricing of medical systems in Amsterdam. Obviously, when then there's a price agreed with and the P&L results are not met, it's not their fault, it's the Amsterdam people's fault. So it's really, really important to hold them accountable at the lowest level. Our management accounting, if you start splitting it a little bit up, I think we have great people. I think we have very, very poor systems, and we are making big investments now to basically come to global standards or beyond that. So with great people come also a lot of process improvement. So I would rate it indeed at a 7.
Okay, 2 7s out of 10.
It's not bad for a South African investment company. Same as Phillips.
Exactly.
Jaco, final comment from you. From your experience of the sector, how good is communication of management accounting generally?
I think it has greatly improved. We've already alluded to integrated reporting. I think there is still a bit of a concern with regards to strategy in particular, so that it falls into the wrong hands for competitors, for example. And companies are still reluctant to indicate that they are hoping to expand into Nigeria or Brazil or Australia or whatever the case may be. So striking a balance between communicating enough strategy and getting everybody on board and not communicating too much so that you lose a competitive advantage is still a challenge out there, I think.
Of course, the danger is that a company says we're scared of giving away information, so let's not say anything at all.
Exactly.
That's the danger, and then you end up with no relationships and no information and no one knows what's going on. Well, it's a time for a short break now in our CIMA discussion. See you in a moment. Welcome back. You're watching the CIMA Management Accounting Series, and the topic up for discussion today is financial strategy. Still in studio with me, we have Pienaar, who's the Chief Financial Officer at Grande Parade, Jaco Moolman from UNISA, he's a Senior Lecturer there, and Alexander Visser, who's Head of Finance for Phillips Africa. And now joining us from Lagos in Nigeria is Biodun Olorunnisola, who is Head of Risk Management for Wealth, that's at the Wealth Group rather, at Stanbic. Hi Biodun, thanks for joining us in this conversation. Perhaps particularly from the financial services perspective in Nigeria, the state of management accounting. We've talked about the areas of investment, what projects should be undertaken, finance, where we get the money, and how much cash should go to shareholders and how much back into the business. So your perspective of the level of management accounting at the moment, particularly in financial services in Nigeria.
Financial management and also even, financial strategy, it's for all business type, whether you like it or not, and really it doesn't have color, neither does it have a region that is specific to. What is happening in this industry is somewhat also applicable in other industry. However, the peculiarity of financial services industry, when you go from, say, a bank to an asset management company, might not be so much the same. But it's important to actually stress that management accounting is actually the language of business, even though some people say financial accounting. But the decisions are taken based on information that people have. And I've had the other discuss and speak about what communication can actually do for companies or what it has been doing for companies. Because you cannot communicate strategy without financial implication of what you're doing. So one of the greatest men on earth before said that who wants to construct a house without considering the cost of building the house. So it's not just about I want to build a house today. It's about I want to construct a building today, but am I going to have money to be able to actually complete the house? So it's not a project that I'm going to start without ending. So from the financial services perspective, so whether it's a bank where you've got to get money from depositors, and where you have to also lend those money out to people that wants to get money that need loan. It's instructive to actually use the example of Northern Rock, how they arrange their finances, and what led to the problem with Northern Rocks, where you are lending long term and you are collecting and you are funding from short term perspective. And the same thing is actually applicable also in Nigeria, where we have banks, they do asset liability management. And behind this asset liability management, or trying to match the funds that you have with the demands for funds, is that you've got to look at your finances, you've got to look at your balance sheet, you've got to look at your income statement, especially your balance sheet, and see where exactly are the sources of funding and where am I going to deploy this fund? At the end of the day, when I deploy the funds, the whole idea is to make stakeholders and shareholders to be better and to maximize the value for shareholder.
Biodun, I'm just going to move to Dylan Pienaar. He's the Chief Financial Officer at Grande Investment. The Africa expansion, I mean, this brings us back to what are we going to invest in? You're a global company already, but you're the kind of company that would like to grow into Africa, presumably. I'm not sure what your presence is at the moment, but clearly all South African companies, when we do results in the studio, results, presentations, interviews and so on, there are very few South African companies that are showing growth who are not in the rest of Africa. The ones who are only exposed to Africa, South Africa are pretty flat.
David, I think you've kind of hit the bullseye of today's topic. Talking about allocation of resources, that is a very, very big question for any South African company. With our asset in Burger King, when do we go to Africa? How do we go to Africa? And what is it going to look like when we go to Africa? And once again, that's a decision we look at almost constantly. Right now it's an easy decision because we need to make sure that our assets working in South Africa and have our base that we can launch into Africa. But once that is set up, it becomes a very relevant question. And I think we have the benefit of looking at other South African companies that have gone there, but your allocation of resources into Africa is critical. You get it wrong, you lose value. You get it right, you make a whack of value for your business.
I suppose from the academic point of view, you might have a view on this. What is the quality of information coming out of African countries? We've got certain standards in South Africa. I'm not saying they're better or worse, but there must be variations in the level of information. So in making a decision to go into another country, you've got to find out a lot about the businesses that are already in that country.
Yes, I think the benefit for countries in South Africa that they've also found is that the level of education throughout the rest of Africa is pretty good within the corporate environment itself. So I think that is a great benefit. There's also the benefit of a number of other South African countries that have already ventured into Africa, and that will obviously help with the risk identification, because there's just so many risks, from basic risks like having an authentic voice in a TV advertisement so that it speaks to the correct market, to much more detailed information like labor laws and all the rest of it. But there's so many lessons that are already there that has been learned and that other companies should leverage of.
Biodun, final question for you before we leave you on the show is, what are the obstacles in Nigeria? Every country has its own advantages and disadvantages. Obstacles for business and how management accounting can help them overcome those issues. I know I've been several times to Lagos in the last year, and I know that one problem you have is traffic. We all have traffic problems, but yours struck me as particularly bad, and everyone knows that. Executives have to have drivers so that they can work in their cars. Now, that's just a down-to-earth basic issue. But big picture in Nigeria, what do you see as the challenges?
I think that from what I've been seeing of late, we just have a new government, and the government is trying to settle down. At the moment, we need to actually have the government have its cabinet in place, because that's actually it's a bit of a concern for investors, and the policy direction, the fiscal policy direction, it's something that government needs to put forward so that investors can actually have confidence in where government is going. So I think that for me, that's one of the things that that we need to actually put in place in Nigeria for now. By the time we have new government, the new cabinet for the incoming government, I believe that things like power would come in place as well. Because, for instance, the refineries in Nigeria that have been moribund for a while, I learned they've started working, and so for me, the first thing that needs to happen is that we've got to get government moving, and the private sector is going to also follow suit. So from management accounting perspective, what's important also is that we've got to create value. We've got to actually look at different scenarios to ensure that if I'm coming, say, as a foreign investor into Nigeria, I'm not going to, I'm prepared for whatever can happen. So I can create different scenarios about what can possibly go wrong. So assuming that the new government does not have a new cabinet in, say, 2 months, what happens if power does not come? What are the mitigants I've got to put in place? So really, you mentioned traffic as well. Traffic is an issue that I think that creates opportunity actually for infrastructure development. And you know, as I work for an asset management firm, and reality of matter is that there's so much investment that can actually come into Nigeria via the infrastructure financing or infrastructure funding, because we have a whole deficit of infrastructure in Africa, or in Nigeria particularly. And I believe that from management accounting perspective, because you cannot go into infrastructure financing without financial information in the first instance. So you've got to look at, as a foreign investor, if I put $1 billion in Nigeria, what am I going to get in, say, in 5 years' time, in 10 years' time, in 20 years' time? And those are the advantages that a management accountant brings to play in the Nigerian economy, so that at the end of the day, economies are run on data, and by the time we have good data, our development issues will become things of the past. And when we have committed government as well,
we'll have to stop there. Thank you.
Committed private sector players, we'll be fine.
Thank you, Biodun. Our time with link with the Nigerian studio there has expired. Thanks so much for joining us, Biodun Olorunnisola, who's head of risk management for Wealth Group at Stanbic. Let's pick up that point that Biodun made, Alex. He talked about, I think, an excellent point there about. I made what a half sort of light point about the traffic, but it's a serious issue there. It's a serious issue in most countries. And he's saying, no, but there's an infrastructure issue here, and management accounting can help in dealing with that. Now, you as a big multinational and a big company in the Netherlands, I don't know if you're the biggest,
No.
but you must be one of the biggest. Mm-hmm. You have influence. You can help government, presumably. You have resources, and often governments don't have the same resources. You can actually help with the information that they get, and that's where management accounting comes in.
No, definitely. So one of the things that as a company we are working on is, for example, primary healthcare. This is basically bringing healthcare to the masses of Africa, or to the masses in the world that don't have rapidly access. And so we bring money flows, for example, from US aid, or from UK aid, or from the Dutch aid organizations towards Nigeria, together with plans. So finance plus the project team creates a plan that we present to government, which includes, for example, clinics or hospitals, including financing, and present it. And we do it across Africa, but especially Nigeria is very well suited for that, yes.
Yep. Let's talk, Jaco, about government and non-profit organizations with management accounting, and then, of course, the companies that are for profit, that are there to make money for shareholders. Different emphasis for management accounting.
Yeah, slightly different, because it's not necessarily as long-term, and it's more about achieving current budgetary constraints and requirements. So it is perhaps more short and medium-term view. And as mentioned before, it's based on the 3 pillars, or the 3 E's. So it's all about efficiency, economy, and yes, you can...
Sorry, the document, just to say how the official CIMA document, talking about commercial, government, not-for-profit managers. The emphasis there are more on macroeconomic things: inflation, productivity, labor relations, policies on inflation, tax, exchange controls. That's not the sort of thing that Phillips and Grande have to worry about. They've got economists to worry about that.
Yeah, absolutely. Government has to create an ideal environment for business to operate in. So that's obviously managing inflation, which could be managed through interest rates, and that will affect exchange rates and all the rest of it. And all of that comes together to affect job creation. Oh. So that's government's main purpose, is to create value and to create an ideal environment for companies to operate in.
Is your sense that government's accounting, management accounting, in doing all this is up to scratch?
It's a difficult question just to answer off the bat.
Is this like them answering on whether their companies are communicating well?
Yeah,
give them a 7.
Give them a 7. Yeah, that's safe. Room for improvement.
If you listen to the opposition party, I'm sure it will be much less. Yeah. So it depends who you listen to, of course.
But one hears stories of the internal audit function, the accounting function, the management accounting function in many government and municipal departments, just unfilled posts, for example.
Yes, absolutely. And, you know, all the fraud with the education and the qualifications that they hold. And on top of that, the misperception that if you get a clean audit report or a clean bill of health, that everything is absolutely perfect, which certainly isn't the case. I think Dylan alluded to it earlier that just because the audit report is correct, it only means that what you're doing is fine, but it doesn't necessarily mean that you are actually doing the right things.
Doing the right things.
I think, David, just to kind of take a commercial look at non-profit organizations and government in particular, I can't comment whether their management accounting systems are working or not. But what I can comment on as a stakeholder of government, being a citizen of South Africa, I don't see it. I don't get that communication we spoke about externally. And if I look at it, a profit organization, we've got shareholders, we've got funders, we've got a whole number of stakeholders that we can pinpoint. Government and non-profit organizations, their stakeholders are the people of the community, country that they're in. And they need to understand the needs of those people and then start aiming towards delivering those needs and satisfying those needs and communicating it. I mean, I'd love to see this is our target in terms of security, this is our target in terms of health, and we're hitting it on a monthly basis or an annual basis.
Also, there's a lot of retrospective accounting with government. You know, that's what we spent. And then when the budget comes, that's looking forward. But you never hear next year what happened to last year's budget.
Well, I mean, I think you mentioned it a lot earlier in terms of the Defence Force example that you gave. And I think if government and non-profit organizations could take a Phillips approach by saying, let's come up with a strategy, then I'm going to go to my funders and my financial resources and sell them that idea, sell them that strategy and say, guys, this is the benefit you're going to get. The funds will flow to make that strategy a reality. And I think it's probably, in some instances, the wrong way around. You know, you've got a budget and you've got a R1 billion and that's all we can do with it. I really believe a Phillips approach to that would turn it on its head.
Yeah, to that indeed. If the governments become predictable and reliable on promises, there's a lot of private parties interested in co-investing in a lot of the... So the cake is only as big as you want it to be.
And you know, if you were guided, if a joint project is guided by these guidelines that we have, what should we be doing? Where should the money come from? Borrowed, private sector, whatever. And how much are we going to reinvest? Well, in the case of a government project, you'd reinvest, but how much are we going to divert then to other things? Same principles apply. I think we have a question from the audience now. Yes, if you could just identify yourself and where you work or come from. And
Thank you. I'm so glad to be part of this interesting conversation. I'm Sanli Middelberg. I'm from Northwest University in Potchefstroom. I love the topic financial strategy, and Alex spoke about it earlier, and he mentioned equity flowing and with that coming debt. So my question is, when you consider financial strategy and investment, what role does your capital structure decision play? So deciding whether you need to fund with equity or debt and all the different factors. Thank you.
Yeah. Obviously, the cost of capital is a major influence for our investment decision, especially when we start, for example, production locations or somewhat more capital-intensive activities. The difficulty in Africa is that capital flows are not always very predictable nor reliable. So we tend to, for now, make small equity injections, spend the money. If the operation is viable, we set up a full legal entity and have an optimal debt equity structure in the local entities. But for now, we're funding what we call the Phillips Africa entity with money every year where we make investments.
I think, David, just to chip in, Asante, without a doubt, a capital structure is one of your primary concerns and decisions that you take into account. If I look at South Africa currently, you know, the returns that your shareholders are expecting, your cost of equity is extremely high, probably the highest it's been in years. So debt really becomes that enabler to bring down your cost of capital, to enable you to invest in value-adding initiatives. Debt is great, but it can also be really dangerous. So you've got to be careful, and you need to understand that sweet spot where what level of debt will really trigger your returns.
Another question over there.
I am Billy Kutsia. I'm also from UNISA, and I have a question. The panel explained to us the thoughts of going into the decision of making an investment. And that's quite clear to us. And obviously, if you want to make an investment, you want some return on that. So you want to have a look at the dividends. Can the panel explain to me the factors influencing the dividend policy? Thanks.
Yeah, I think as a start, we have to recognize that dividends has a signaling effect. So people will analyze the dividends and any dividend policy and change to that and interpret that as the expected future of and stability of the company. So that, along with various other factors, obviously influences dividend investment opportunities, the amount of cash which has to be retained in the future, working capital. And then there are external factors like debt covenants that could obviously have an impact on that as well.
Of course, I think by dividends, people think of dividends, listed companies every 6 months paying a dividend. It's not just that, it's distribution of money to the shareholders as opposed to keeping it in the business. Isn't that what we're talking about? Not necessarily dividends technically. I mean, and the policies are different. Warren Buffett, regarded as the best investor in the world, no dividends. He doesn't pay dividends. He says, we want our money to be reinvested and you get your money in the share price. You look skeptical.
No, not at all.
It's the opposite of your view.
No, definitely not. I mean, I think Warren Buffett, we're talking about an absolute guru. And the reason why he's been able to do that is he's had probably a laundry list of investments that are all mega value enhancing. So it's never been a need to give it back. If I talk about our philosophy in terms of dividends, yes, we do want to give back to our community investors. But another philosophy we have is that if we have cash, and there's no investment on the horizon, we're not going to sit with cash. Give it back to the shareholders, let them invest it somewhere else. Because the worst thing you can do is not make a decision on cash and leave it there. It's the worst investment decision.
So there's this balance between pleasing the shareholders. If you have a policy of giving the money, might not always be possible. Anglo-American passed their dividend several years ago and everyone freaked because it was regarded as as regular as a salary, the Anglo-American dividend, and they didn't like it. What's your approach to that balance between paying out and keeping?
Yeah, so Phillips has a portfolio of investments that it is basically keeping in the air. That can either be product investments or market investment or a combination of both. So if there's no immediate investment opportunity in the market, and we can say, let's take Kenya or South Africa, and there's excess money, we would give it back to group, who would reinvest it in another market or product or combination.
Not to the shareholders.
We have a very stable dividend policy at group, and we actually quite recently increased dividend, indeed to give that signal that we currently would like to give more money back because we don't want to sit with excess cash. But within the company, we pay dividends from the local units to group so that they can reinvest again.
So I suppose the great danger is making a rigid dividend policy, as in effect Anglo-American had, and then disappointing people. I suppose it's, as long as you don't disappoint, as long as you are consistent.
David, I think,
Coming to another question.
I think the important thing there is have a rigid dividend policy, but if you're going to break it, communicate it.
Yes.
Okay.
And don't pull the rug out from underneath your shareholders. And there's a valid reason why you haven't paid a dividend, and explain them what the future plans are, why you're reinvesting, and they should get comfort out of that.
Yeah, that's obviously the clientele effect, and a constant dividend policy will attract a certain investor, and another investor will be happy to wait for capital growth in their share price. And just changing that upsets the balance of your investors.
Yes, from the floor, another question.
Hi, I'm Vivian Erasmus from CMA Incorporated. My question is more on corporate social responsibility, and Alex, you did touch on it a little bit. How does it play into determining the balance in your financial strategy with making profit, especially for our profit-making companies? We've seen this global trend quite frequently in South Africa, starting out now quite harshly with people demanding corporate social responsibility. Your thoughts on that? Thank you.
Should I start?
Okay.
We are a healthcare company for the larger part, so we are 60% of our company is healthcare. And we have a mission statement saying that we want to touch the lives of 5 billion people by 2025. So a lot of the investments and a lot of the decisions that we make are based around that goal. Quite recently, we also set up a foundation with money in to make specific investments in the socially weak or the socially exposed parts of the world, where we would, with the plane crash of the MH17, we would support that, or Ebola. So yeah, it's definitely on the agenda. We are driving that hard. We are, in Africa specifically, we have invested in what we call an incubator. It's located in Kenya. We have 40 or 50 people employed who develop specific products for Africa. And it goes from solar lighting for the 600 million people who don't have access to electricity, or it goes to very specific hair weaving devices, or to egali cookers for very locally relevant products. Obviously there's a profit drive, we are a multinational with shareholders, but we want to be locally relevant.
Anything to add, Dylan, from your company's point of view?
I think CSR, it's becoming a buzzword, but it has to be there. It's been there in the past, and we have to move forward on it. And it really boils down to the why question. Why are we in business? Everyone says it's profitability, but there is a reason for being in business, and that's going to be how your business impacts the communities around you. And it without a doubt has to be a focus going forward. It's a lot easier for Phillips, who are in kind of an industry that's bettering people's lives, a little more challenging when you're in fast food and gambling.
You're not making their lives worse, are they?
You're not making it worse, without a doubt. But I think in those industries, we as a company, we really need to understand the why question and make sure that every step we make is responsible. And I think in South Africa, there's a lot of CSI, so there's a lot of investment happening, checks being written out, donations being made. We need to migrate to a CSR program where
But again, on CSR, your investment, your finance, your dividends, and perhaps not the dividends so much, but what should we do? Where do we get the money from? Is it in partnership with other people? Is it all from us? Is it from profit? Is it from a special fund?
Yeah, no, but it is exactly maybe as a normal investment. It is where can we have the highest impact of the CSR that we do. It is not about simply giving away money. It is about making a relevant contribution to society.
Yeah. Another question from the floor.
Hello, good afternoon. My name is Rob Ward. My question is, how do you guard against making short-term decisions in favor of a long-term strategy? You might have a dividend policy, or your policy is to pay dividends. You make an investment on a company that is giving you a dividend this year, next year. Whereas if you'd made the investment in a company that's not paying dividends and looked at it over a 5-year period or 10-year period, your return would have been much greater, thus enhancing the value for your shareholders.
Yeah, David, I can chip in there. I think it's a matter of aligning your decision makers with your shareholders, and a lot of it's got to do with remuneration structures and making sure that you aren't paying your decision makers kind of a massive guaranteed salary with no performance or long-term incentives. You've seen a global trend towards relatively small guaranteed packages with long-term incentives linked to performance of the business. I think that's probably something you can implement immediately, and is a very effective way to make sure your decision makers are aligned with your shareholders.
One more question from the floor. We did ask our audience to ask questions, and they are, so we have to take them.
Malcolm Ferber, a strategic implementation advisor from Mythos Delphini. So I'm coming from a strategic implementation viewpoint. Many companies struggle with the actual strategic implementation. And that's where I make my money, obviously. How well do you measure how you're going on your strategy, and what mechanisms and reports do you use to ensure that you're on the right path?
Great question, and it's referred to in my introduction where we talked about monitoring. It's all very well to have this great strategy, but you can check that it's happening. Do you want to pick up that to start with?
Sure, I think it might be better for the corporates to indicate what reports they're referring to. But I'd imagine there would be standard management information system reports that would have to be used, and there would be set ratios and targets which have to be established. And it's important to recognize that those targets would differ from one country to another. An interesting story is an insurance company that used to be in South Africa and tried to base themselves in Namibia, for example. And in the insurance industry, there are claims ratios. And they recognize that the amount of motor vehicle accidents in South Africa and Namibia are the same, but the actual impact and damage caused is far greater in Namibia because they've got dirt roads and there are more write-offs. So I think understanding ratios in different environments and understanding what to look for in the management information system reports are quite important. But I think the other gentleman can comment more on how they measure strategy.
Yeah, I think, Jaco, you're spot on. It's a matter of determining what do we need to look for, what information do we need to understand and monitor how the underlying business is performing. And it also lends itself to that wealth of information, filtering through to relevant information and making sure it ties into your strategy. My view is it's a bottom-up approach. So the operations are feeding up to the decision makers, and then there's a bounce back down in terms of saying, well, are we on track? Aren't we on track? Where do we need to get involved strategically? Do we need to allocate resources, funds, etc.? So it's a complete iterative that happens on a consistent basis. But you need your targets and measure against your targets.
Again, it's a paradox. There's so much information. Good management accounting picks the information that is necessary, relevant, enable you to make the right decisions. Also, I gather that CIMA is creating a diagnostic tool that will be available to companies to say, what's the value, what's the value that is being added, and how well is your management accounting system and practice working? So you can look forward to that. Well, that brings us to the end of this episode of the CIMA Accounting Series. Sorry to have to stop here, but time is against us. Thanks to my guests, Pienaar from Grande, Jaco Moolman from UNISA, and Alexander Visser from Phillips Africa. And joining us earlier, we had Biodun Olorunnisola from Stanbic in Nigeria. And of course, thanks to our studio audience for their input as well. Until next time, for our next CIMA discussion, it's goodbye from me, David Williams.
Thank you.